In this video, I'm going over the basics of Bitcoin. I'll also show you what a blockchain is and why it's such an important innovation, as well as how Bitcoin fits into the financial situation moving forward. And stick around till the end of the video so you can start to wrap your head around what could be the best performing asset of our lifetime. Hi, I'm Jeremy Zargami and welcome to my channel. Today, I'm going over Bitcoin 101. This is for a beginner in the space who wants to just get an idea of what Bitcoin even is. Sure, you may have heard many people talk about it, but what even is it? And what functional use does it have that makes it such a good asset? If you like making money and learning how to take control of your financial future, click that like button, because the way the YouTube algorithm works, unless you hit that like button, YouTube will show this video to less people. So to help out this channel and to help more people see this great content, hit that like button down below. And if you're a beginner investor, don't forget to subscribe. This channel is all about helping out new investors and guiding them along on their journey of growing their wealth. So be sure to subscribe and hit that notification bell so you can see every time I post a new video. I post a new video every Monday at noon. Now let's get into it. So to understand the necessity for Bitcoin, we first have to understand some basic things about money. In August of 1971, President Richard Nixon announced that the United States would no longer convert dollars to gold at a fixed value, which completely abandoned the gold standard. The gold standard was replaced by fiat money, a term to describe currency that is used because of the government's order. In other words, money is value that people trust in because the government says it has value. Money isn't backed by anything besides the government saying that it's legal tender, which means that it has to be accepted as a form of payment for something. Money has taken many different forms throughout history, and each year that passes, money is transforming more and more from a physical asset to a digital asset. Today, we mostly use credit cards, debit cards, Venmo, PayPal, or wire transfers, and the bank acts as a ledger to keep track of how much we have and how much we spend. We trust the banks, kind of, and they trust their computers. This is a centralized way to keep track of your money, with the bank being the centralized entity. The problem with this is that the banks have too much power, and it is shown over the years this power often leads to corruption. Banks were one of the main reasons for the 2008 market collapse, and since banks can't fail, they just got a slap on the wrist and got bailed out, which caused the Fed to have to print $700 billion to bail them out, which in turn causes our dollar to lose buying power due to inflation. By holding your money in a bank, you're essentially giving all control over to that bank, and trusting that they won't misuse your money or freeze your funds. And this is not fear-mongering or a conspiracy theory. This has happened in many other countries before. Here are some key differences between Bitcoin and banks, and why many companies are choosing to hold their money in Bitcoin now instead of holding them in banks. Bitcoin is transparent, so you can see every transaction that happens on the ledger. It's anonymous, but you can still see all the amounts sent and received. And it's decentralized, which is a big deal. It means there's no entity that has control over it. Banks, on the other hand, have a non-transparent ledger, which means they won't show you their books. This leads to more shady activity behind the scenes, like when Wells Fargo got caught for making millions of fake bank accounts. And they are centralized, which means they have all the control. Like I said earlier, banks have shown over and over that they are not good stewards of this control. There's a huge push for decentralized finance right now, or DeFi for short. This innovative technology would essentially get rid of the need for traditional banks. There are DeFi programs that are coming out right now that will allow you to hold your money in them, and you'll have full control of your money without needing a third-party bank to hold it. I won't go too in-depth on this subject in this particular video, but if you'd like to see a more in-depth look on decentralized finance and some of the projects that are being built right now, hit that like button down below so I know to make that video soon. The reason Bitcoin was created in 2009 was because Bitcoin's founder, who goes by the surname of Satoshi Nakamoto, saw a huge flaw in the banking system and fiat currency, and wanted to create a better way to do peer-to-peer transactions without the need of a middleman, something that was completely transparent and wasn't controlled by any one person or entity. So he wrote the first white paper for Bitcoin in 2008, and then Bitcoin went live in January of 2009. No one to this day knows who Satoshi is or where he is from. He remained anonymous while he was helping to get Bitcoin started, and the last time anyone has heard from him was in April of 2011, when he communicated to one of the contributors of Bitcoin that he had moved on to other things. I guess he felt that Bitcoin was mature enough to take on a life of its own, and it didn't need him around anymore to flourish. Even though Satoshi created Bitcoin, once it went live and the first block of Bitcoin was mined, it became decentralized and he no longer had control over it. This was the beginning of blockchain technology. Computers all over the world use complicated mathematics to verify Bitcoin's transactions, which are added to a permanent public list of transactions called the blockchain. The blockchain is spread out and stored on all of those computers and acts as a universal record of who owns what. As Bitcoin grows and more computers all over the world help store this public data and run the complex sequencing to mine more Bitcoin, it only makes the blockchain more secure. This is because you'd have to hack all of those thousands of computers all at once in order to hack into Bitcoin, which at this point is impossible. It may have been possible in Bitcoin's infancy, but now the blockchain has grown so much that it would be impossible to hack. You may be asking, why is decentralization such a big deal? This is what what draws many people to Bitcoin. That and the fact that there will only be 21 million Bitcoin that ever exist, which makes it more scarce than gold. No one can control or manipulate Bitcoin, and everything is open and transparent for everyone to see. This is the first time in history that we have an alternative to fiat money that isn't controlled by anyone. Here's a good comparison. Before the internet existed, there was centralization of information. You could only get information through certain outlets like the Wall Street Journal, the New York Times, or certain radio outlets. Now with the internet in its full maturity, information is decentralized, and we can now consume any information we want from anyone in the world within seconds. Bitcoin is doing to money what the internet did to information. You have full control of your money, and you can cut the middleman from the process. This opens up commerce to 2.5 billion more people in the world that don't have access to the current banking system. As long as they have a mobile phone, they can make money now and hold it securely with no permission needed from anyone. This connects the whole world together in a way that has never been possible before. This solves a huge problem in our world today. Think about it, 2.5 billion out of the 7 billion people who live on this planet don't have access to the current banking system. That's 35% of the world's population who can now buy and sell things worldwide for the first time in history. The whole world will benefit from this. That is a huge influx of people who can now bring value to the marketplace and be compensated correctly in a safe way that can't be taken away from them by their government. Another reason people are turning to Bitcoin is as a hedge against inflation. When the dollar was backed by gold, there could only be as many dollars as there was gold to back it up. So the government couldn't just print money when they wanted. The money you had used to represent how much gold you had. But when we went away from the gold standard and the dollar became a fiat currency, we could now print money whenever we needed it, which lessens the value of the dollar every time. This leads to inflation, which leads to things costing more, which in turn makes the value of your money worth less. Bitcoin is a finite asset, which means that there's a set amount of Bitcoin and no more will ever be produced. That's why many people call Bitcoin digital gold or gold 2.0. Bitcoin was originally created to function as a peer-to-peer currency, but now it's looked at more as a store of value like gold. This is why a ton of companies are starting to hold some of their cash reserves in Bitcoin. Most notably so far are MicroStrategy and Tesla. MicroStrategy is the most bullish, holding all of their cash reserves in Bitcoin. And Tesla just bought $1.5 billion worth of Bitcoin, which is 15% of their cash reserves. And I think this is just the beginning. I think so many more companies will follow. Twitter CFO said they're not only considering holding some of their cash reserves in Bitcoin, but they're willing to pay their employees in Bitcoin if they would like. Apple is rumored to be buying $5 billion worth of Bitcoin, and also adding a crypto feature to their wallet app on all iPhones. Mass adoption for crypto assets are happening much faster than people anticipated. Many people attribute it to all the things that happened in 2020. They say it accelerated the digital space by 3 to 5 years at least. The massive amount of money printing has played a big role as well. People are worried that the value of their money is going to significantly drop in the next couple of years. So many people are putting their money in a deflationary asset like Bitcoin, so that they don't lose the value of their money due to inflation. So you may be saying, this all sounds great, but what should I do? Many people are comparing where crypto is at right now to where the internet was at in 1997. This means that you don't need to FOMO into crypto. You have time to slowly buy in. Imagine if you slowly bought into Amazon from 1997 until today. I think you'd be doing pretty good. This is the opportunity that we have with crypto assets right now. So my suggestion, and this is not financial advice, so do your own research, but I would slowly buy into Bitcoin like you would with your Roth IRA. Dollar cost average in each week or each month as an insurance against the dollar and inflation. Cryptocurrency is here to stay, so I would definitely take it serious and do a lot of research on it. There's going to be major opportunities to get ahead, and I don't want you missing out. What other topics in crypto would you like to see me talk about? Comment down below. If you like that video, I'm going to put another video right here that I think you will like, so click on that video and I will see you in the next one.